Do you still love me or not?
Hi, I'm King, and this is Frankly K. Is that how I start this? It's been such a long time. It's been a long time, so okay, let me try this again. Hi, I'm King, and this is Frankly K, where I do financial literacy videos, book reviews, vlogs, and what's the other thing? Oh, journal with me. So if that's interesting to you, please consider subscribing and join us here at the Midnight Pulp Party. Let's get into today's topic because it's been a long time since I did a financial literacy video. So I wanted to talk about some basics again because they are questions that I get a lot. And it's unexpected. And maybe it's just unexpected because I'm used to it, because that happens, I think, in any industry where you take some information for granted. And so my whole point with some of these financial literacy videos is to get down to information that is taken for granted, tiny informations that you just assume things or you've heard things. Like, perfect example, somebody was like, well, I know that your money market accounts aren't FDIC insured at the bank, but I was wondering if CDs are insured. And I was basically like, well, no, because money market accounts are insured. They're just, a what I would say a high value savings account, because a lot of the times they have percentages that are above the standard savings account percentages, but they're still not the same as like a high yield savings account. And they're definitely not going to be the same value as a CD, which locks in your rate. Like, you could have a rate from last year. If you did like a 2-year term or something like that, you could have a rate from the time where rates were 2 years ago, probably in the 5 percentile, upward towards 5%. And you could have that right now if you had did a 2-year CD. And right now rates are probably more around 3 to 4%. So that's CD is probably going to be your best bet when it comes to the highest value of return you can have on a savings account at an institution. But CDs are FDIC insured, and so are money market accounts. So stuff like that. Today's topic is what to look for when looking for a bank account. So there's a myriad of reasons why somebody might not have had their own bank account as of yet. Whether it be you were just not interested. I know a lot of people who just spent a long time not really trusting the banks. And then one day they were just like, you know what, whatever, right? Because as the world gets more and more digital, it's kind of hard to, which I still think is a problem. It's kind of egregious to expect everyone to only do things digitally, and I feel like cash should always be an option when it comes to people being able to pay things in cash, or like, use cash, get a money order, and pay paper, like mano y mano. I still think that needs to be a good option just because of lifestyles, occupations, the way people like to utilize their money. A lot of times cash honestly is king. So the point is, as things get more digital, people are kind of forced into getting bank accounts. And now I am someone who, even though I believe cash is king, I do believe bank accounts are extremely useful. So if cash is king, then a bank account is like the high priest. And sorry for hearing some fan noise, but there's a growing tent behind me, so it's like that episode Goosebumps where the dad was like, that famous episode, Stay Out of the Basement. That's what I feel like sometimes, living with a botanist. Like, it's like, what are you doing in that tent? So today's topic is what to look for. Just very minute things, but they can become major issues. How easy is it to remove or add a joint signer? You wouldn't believe. Most people would assume the biggest trouble is, trying to add someone to your account. And honestly, more people is trying to get someone off the account. So life happens, things change. You might have had an account with like your mom or your dad or a grandma or like a sibling or even a partner. Maybe you were married, stuff like that. And for most instances, in some banks, I hesitate to say all because, I haven't been at every single bank in the world, right? So I'm just going to say some or most banks when I quote these things. And you can't just remove a joint owner. It means this is also their account. So imagine like someone just coming and removing you off of your account. That's crazy. That's the whole point in joint ownership, is that you have built a level of trust, or you have a level of trust in this other person, that you are expecting that both of you will be fully responsible for what happens with this account. And it remains that way until the account gets closed by either party. And in most situations, the other person took here with a joint account, both of you are responsible for this one account, meaning no one person can remove power from the other person. The only time you can technically remove power is by one person going into the bank without the other joint owner removing all the money, because you can do that because you are responsible. You are both solely responsible for everything in that account. So one party can come in there, empty the account. That's why you hear stuff like that, people taking money out of a joint account. And I think everyone has seen stuff like that, even on social media. And then you're left in the predicament where one party trying to be responsible, you still have no power over what that other party is doing. You always want to be clear about your intentions with a joint account and how much you put in that joint account, because like I said, adding is not as hard as removing. Most of the time removing is not an option because like I said, this is joint ownership. It wasn't a beneficiary situation. It wasn't you're an account and here is a signer on the account, where you can add and remove a signer on a business account. Like maybe you have a manager, an office manager that you need to have access to business funds. That's completely different because it's a business account and not a consumer account. A consumer account is just, you can add and remove signers a lot easier than you would think. And that's exactly for that purpose, because they're not fully authorized on the account. So there's certain things signers can do and certain things they can't do. In the case of a joint ownership on personal accounts, each party can do whatever they want. They can do whatever they want within the scope of banking law to that account. So you always want to keep that in mind. And like I said, if you're trying to remove somebody, most banks are not going to allow you to remove anybody from a joint account unless the person is deceased.
Does it have monthly fees tied to balance requirements or direct deposit requirements?
Everything's always very attractive in the beginning when you're opening a new bank account. It's always very exciting. Monthly fees tied to balance requirements and direct deposits. You want to make sure sometimes you no longer have the direct deposit that gave you that free checking account. Sometimes the checking account is only free because you have a qualifying direct deposit, meaning whatever amount comes in every month is what makes it. Like say it's, most places start at like $500 or something like that. Some places even be like $300 or something like that. But some places go all the way up to like $1,000 or $2,000, depending on the tier you're on in your checking account and depending on the bank and how they've set up their system. Because of all of this, if the direct deposit stops, you will start getting assessed because there is no direct deposit. Now, moving money from one place to another, like automatic transfers, do not count as direct deposits in most cases. In the cases I've seen, they don't count. I don't know if other banks, have different rules, but in most of the situations that I have been in, direct deposit has to be an external payment, like something that says payroll or direct deposit. Social Security counts. Any kind of treasury payments that also seem to dub as Social Security for, I guess, people with certain careers, because I don't know what their careers were before. I'm seeing the aftermath, so I don't know exactly. I'd have to look up what exactly these treasury payments are, except I've always just assumed it's like a different part of like a pension kind of thing. Those count as direct deposits. If you no longer have that qualifying direct deposit, you will return to somebody who has to pay the monthly fee. So first of all, because you set it up, you probably weren't thinking about what the monthly fee was, but always find out what the monthly fee was and wonder if you can afford that a monthly fee if you no longer had a direct deposit. If you are okay with them taking anywhere from $5 to $15 a month. There are some checking accounts out there that are like $15 a month in maintenance. You need to understand that before you get something with qualifying things for free checking accounts. Other than that, really stick hard on looking for absolutely free checking account where there are no minimum balance, no monthly requirements, anything like that. Balance requirements. You need to make sure that the balance requirements, what kind of balance requirement is there? In most cases, I've seen really only two types of balance requirements. So one is monthly and one is daily. And a lot of times, people don't realize something is a daily or monthly. They just see balance requirements and they think they can go up and under within a certain time. But if it's a daily requirement, it gets assessed at the end of the business day daily. And if you fall under the balance requirement, you will get charged, even if you put the money right back in a day or the next day or the day after that. If you put the money back and got the account balance back up, the point is it got assessed already. There is still a potential that you will get charged that fee. There's still a potential. Some places might have a little bit of leeway, but most of the time a daily balance assessment means a daily balance assessment. If it's monthly, it's not always from the 1st to the 30th. It depends on whatever your cycle is determined to be. So that's something you want to determine with the bank, what the cycle is. It could be something like from the 15th to the 15th. So you want to keep that in mind as well. You want to be careful about signing up for an account that says, it's free with balance requirement of this monthly balance or this daily balance or this aggregated balance. Aggregated balance is exactly what it sounds like if you know what aggregate is. And aggregate just means
Editing King here. I didn't like the way I explained that, so I'm going to try to simplify it and make it clearer because I was very unclear and that's not good. Anyway, aggregated balance is what you see at the end of the day in your bank account. Sometimes they will take into account both your bank accounts or all the bank accounts that you have under your name at a certain institution. But for this example, we'll just say you have one checking account and that's what you're opening, and the aggregated balance would be all the things you did that day. So all debits and all credits, all calculated to what you see as your final posting at end of business day. That is the aggregated balance, because like I did say, aggregate just means, a compilation of facts, okay, that are all coming together to create your balance at the end of day. That is what they use to assess what your daily balance is. Okay?
Again, you will get assessed. And I think most people are a little busy, and you don't want to be sitting there having to calculate the averages every month for your bank account. Now, it's a good idea because it will keep you very active and aware, because awareness and clarity means power. I forgot to do that earlier, but there you go. This one is very important, and apparently nobody gives a damn. But every day I see why it's really important.
Does the bank have a branch where you live?
There are so many random instances where you suddenly find yourself in the need to be at the bank in person. Whether it's administrative, like there is some paperwork that needs to be hand signed and sent back. Whether it's the fact that your mailing system is kind of wild. Maybe it takes too long to get things. Maybe you have a problem with people stealing mail in your area. Maybe you have a problem with slow mail in your area, and it's time sensitive stuff. Most bank paperwork is kind of time sensitive. So, especially because it starts to affect the access you have to your account and the funds in it. Even like your online banking can get affected by some paperwork, you know what I mean? Like, so just be near the bank you bank at primarily. It's okay to have a bank that maybe is somewhere else, but then you need to have a primary bank that is where you live. I cannot stress that enough. You need to have a bank that is local to you. People move, you're doing different things, you can travel. That's fine. That's not the same thing as your primary location, where you primarily lay your head. That is where you need to find a bank. Like, that is the bank in that area, somewhere you can go in if you needed to and settle things in person, mano y mano. Okay, because a lot of times there's bank issues that have to do everything with fraud and security, especially in today's age where there's so much like online and digital fraud. There's so much that the bank requires in person just to mitigate or to basically help with trying to get your stuff back on track, that needs to be done in person. Because over the phone or in an email, if you're having an account takeover, how are they supposed to guarantee that that's you in that email? How are they supposed to guarantee that that's you on the phone? They have certain procedures that they go through on email, phone, chat. There's always certain procedures to help, but when it gets to a certain point, you have to go into the bank. They're not going to accept things over the phone. Like, if it got to a certain point where like people get their accounts taken over somehow, where they've got access to your email, they've got access to your online banking, they've got access to your Zelle, they've got access to your any external account that you have linked to that account. They've got access to everything. And in order to get yourself back together, you have to go into a branch. They have to see you, sit down with you and your ID, and really just get through this, shut things down. The most people can do at that point on the phone is shut everything down, which is most of the time what people will do. Things get shut down, they lock down so that nothing can be done at all. But that will cause an inconvenience for you, especially if you don't even know what's going on yet. And then you can't get to the branch because you live in Minnesota and there's no branches in your state. Find a bank that has branches local to you. It's okay to be in another place. Like, say maybe you're young and you're in school, or maybe you're older and you moved states for a profession. Then you need, as soon as possible, you need to locate a bank in your new area, okay, and move the majority. If I know some people really love their banks. Some people really love their banks. They've been there for umpteen years. They had a child account there or whatever. I don't know. Whatever your story is. I promote loyalty, okay? So if you want to stay at the bank because you like the customer service and you like how they do things and you've never had any problems, that's fine. But they are no longer where you are. So you can still do business with them. I'm not saying pull all your money out, but what I am saying is when shit hits the fan, you either need to be prepared to come back to that state where you opened and where all the branches are, or go somewhere where those branches are, or find another bank where you are that is local and you would be able to handle problems if they should occur. I think that is my biggest takeaway from today. Be close to your bank. And don't give people a hard time about proving your identity. It's a bank. That's another thing. Please be prepared with ID and sensitive information when you are either calling, emailing, texting, chatting, or visiting your bank. You wouldn't believe how many people in person, over the phone, in emails, who do not want to give the bank associate that they have contacted their information. And I'm like, okay, one, if you weren't sure that this was the bank when you contacted them, then that is perfectly valid. But also, how far do you think we're going to get if you already don't trust that this is the place that you need to be giving information to? Do you get what I'm saying? In person, the amount of people, especially like in the drive-through, for some reason they don't, I'm not telling you to put your face in the camera, but let us see you, and also put your ID in the tube. When I used to work in the branch, like the amount of people that did not want to give their ID in person was wild, because I'm like, these are the same people that probably go to the grocery store, and if they get carded, they're like, oh, like it's all fun and games at the bar when you get carded, but if you try to get carded at the bank, people want to kill you. Be serious. If no one at the bank enforced any kind of security measure, everyone would be to just stop yelling at bank employees about asking you for your information. They are doing their job. They're doing their best to go by compliance and security, for the security of the bank, and most importantly, the security of your account. Nobody at the bank, for the most part, like I've heard of some situations where people at the bank are crazy, but for the most part, in the places I've worked, everyone takes it very seriously, to the point where they're like, I wouldn't say overly suspicious because of how crazy things can get at a bank, like the amount of things people try, especially over the phone. So I would just say they are wildly suspicious, okay, at all times, because they do not want to put another person in jeopardy. Like, most people who work at a bank realize that this is, in this country, your livelihood. If someone gets into your account, it's over. Be ready with your sensitive information at the bank when you're opening your account, when you're doing business with your account. Understand that sensitive information is necessary, and when looking for a bank account, there are certain places that require different pieces of information to access your account. You know, it depends on your bank what kind of questions they'll ask you, but be aware of that. Okay, the next topic is it FDIC insured or backed by a bank that is FDIC insured? And speaking of FDIC insured, I wanted to make note because I feel like in my brain, I keep getting this inkling that I misspoke in an earlier video about how much you're insured when it comes to FDIC insurance and your bank. And it is $250,000 per account, but the titling on the account needs to be different. So you, as a solo person, like me, King, I can't go open a bank account at, I don't know, Bubba's Shrimp and Tackle Bank at, I've got $250,000 in there. That's insured. But I can't open another bank account under just me, Kang, at Bubba's Shrimp and Tackle Bank and then be insured again for $250,000 unless I change the titling. Meaning, I can have a solo account that's insured, and that'll be $250,000 maxed out, so up to $250,000. But if I have another account and it's me and my sister, me and my sister's account will also be separately insured up to $250,000. And then I could have another account with me, my sister, and my other sister, right, as a beneficiary. And that will be separately insured for $250,000. So this can go up to, I think, 4 or 5 beneficiaries. Explicitly find that out with your bank. If you're somebody who plans to hold lots of money somewhere someday, or you want to, at least maybe you have 3 kids and you want each of them to have an account with you, each one of those accounts can get FDIC insured up to $250,000 separately. So you could have, what is that? That's $1 million total at the bank, and they're all separately insured. But if you just had 4 accounts and each of them were $250,000, but it was a solo account, it's just your name on all of them, you would only be insured up to $250,000. The rest of that money is uninsured. So if there's a merger, the bank collapses, there's, the bank blows up, the headquarters, the money's gone. Then my last point, it says, how will you use your bank account or accounts? Now, how you use your account will affect what you're okay with the account being. So I have here, for example, as a daily transactional account for going out, online shopping, buying things. That is a major thing you should keep in mind when looking for an account, because if, like I have here, if you're just doing daily transactional things, so like you only use this account to like buy stuff online, or like when you go out to eat, or you like go out, shopping at a store and stuff like that, like grocery shopping and everything, you just use it for like minor or like daily kind of activity. That is something where you want to, where I say, find an account with a debit card, reputation for good security, points or rewards, because there are some checking accounts that give you points and rewards. Now, this could be either a mobile bank or a traditional bank, so you want to look into that. Or rollover change savings. A lot of places do that, and that's always beneficial because you're using this card to spend a lot. So rolling over just your change is like when you throw your change in a bucket and it adds up, trust me. And then it says you might not care about small amount fees due to frequent activity. You don't keep money to be eaten away at. Amount fees due to, oh, excuse me, I'm reading the same line again. You don't keep money to be eaten away at. More like you load it knowing you also load the $7 monthly fee. So like I said earlier, you might have a monthly fee on the account. It's not a totally free checking account, but you don't care because you use it like a lot. You use it frequently for shopping and everything, but you can basically say it's like an $8 monthly fee. You know you're going to be spending money on that card, so when you transfer money onto that card to use it, you also transfer the $8 that, came out for the monthly fee. You're not tripping, right? Because the card is for usage, and you're going to use it, so you can keep up with that monthly fee. It's not going to be eating away at any money sitting there, because you probably keep the balance pretty low because it's activity based. Or you would care about the fee because that's $7 you could spend somewhere else. So you want to keep all that in mind. Is this a purely transactional account? Again, look for one with rewards, points, rollover activity for savings, stuff like that. You want to look for an account like that if this is a purely transactional account. Then there's the set it and forget it bill pay account, which I am a big fan of. I have a set it and forget it bill pay account where I calculate exactly what the monthly bills are for like subscription things. Everything's a subscription now. Utilities, like everything that adds up, and you know how they all take their money at a different day. That's what used to mess me up, because one person's taking their money on the 7th, another person don't take it to the 28th, somebody else taking it out in the middle on the 16th. I'm not. I have way too many things to worry about. I'm not about to keep up with all these different dates. Okay, so at the beginning of the month, I have my totals. It's not going to change unless the subscription or something gets increased, like Netflix. Anyway, stuff like that. You take that into account. You calculate it each month at the end of the month. Dump the money in that account. If it's an account like that, you definitely don't want monthly fees on that account, because it's going to be eating away at the money you have set there specifically for bills. Next thing you know, you turn around, but one of your bills is like, we couldn't get paid because it's $12 short, and then the amount got rejected, and you're like, well, where did the $12 go? It was a monthly fee. Like, that's going to mess you up. But you could also treat that as one of the subscriptions. Again, these are things you want to think about when you're looking for your account, though. Definitely want to make sure that this account has online access. Nowadays, pretty much everyone has online access, so you just want to make sure that you have the online access, because the process to get it may be different. You can either get it online, you might have to set it up through the bank itself, you might have to be in person. Depends on the bank. Okay, most times you can set it up online, but it depends on your profile with the bank as well. That's another thing. You want to make sure your profile is completely filled out. I know people love withholding information, and this goes back. It's very much for security purposes. And so when you skimp on information, sometimes certain places, they won't allow you to have access because you need certain pieces of information in the system in order to get online access, so that they can make sure that some random person isn't building an online account for you so that they can see all your stuff. Okay, like I said, The way people circumvent things to get into your information, there's a reason the bank asks you for all the information they ask you, because there's random pieces of information that people aren't thinking about, right? And things that you think are unnecessary at the bank, it's there for that exact reason, because somebody trying to get, and I'm not going to give out what these informations are because security, but the point is, these random pieces of information are the things that separate you from a scammer trying to pretend to be you. All right, I'm gonna leave it there. Maybe that'll sink in. Next, for saving money primarily, but wanting it liquid. So if you want to set up an account, if you're looking for a bank account so that you can save money in it, but you want it to be accessible money, you want more than a savings account, because a savings account has strict regulations on how many times you can take out of it a month. I say this all the time, but apparently people always forget that your savings account is not a free-for-all. The savings account is meant to sit and be saved. So if you want to save money but you want to be able to access it whenever you want, it's better just to get a checking account. The checking accounts, however, some of them are not interest bearing. Most checking accounts, they have like 0.01 interest or something like that. But you might be able to find some checking accounts, mobile or traditional. There are some really competitive banks out here traditionally because they see what mobile banks are doing. So really shop around traditional and mobile and just see how much. When it comes to getting a checking account that you want to use to accumulate money that you want liquid. So for instance, maybe you want to save for trips. Like that's the money, that's the dump place where you dump money for a trip, and then you would make sure you have an ATM card, or what I should say, a debit card. There's a difference between an ATM card and a debit card. I will put that in the description box below so that we don't start stretching this out. But that is one of the reasons why you would get a checking account, so you can have debit card access. You would be able to take money out whenever you need it and not be penalized. So it could be an emergency fund place. It could be, like I said, for trips. It could be somewhere where you put things together for like a big event that you know you're going to be using your debit card to be swiping all around town, to prepare for said event, but you're saving the money for when you get prepared, right? Or something like you use this account to dump money from investments. A lot of people have a checking account where they dump the money because they want to use it for investments, but they don't know exactly how they want to invest it yet, or they just kind of want to sit on it and think. Those kinds of accounts, you might want to look for something with interest-bearing checking. Like a good interest-bearing checking, 2 or 3%. Is realistic, but most of the time you'll get like 1 or 2, right? But there are some places that are trying to be really competitive with interest-bearing checking accounts, and now a lot of them have minimums where you have to come in, but some places don't, because like I said, traditional banks are getting really competitive for people's business, and some of them are realizing that people want more interest if the money's just going to sit there a while. So that is something you want to look for in a bank if you're looking to use it as some place to dump and save, like a little stash house. Maybe it's your get the fuck funds. You know what I'm saying? Everybody got a get the fuck funds. If you don't, you should. And you want a little interest, but you also need access. So that's why you want it to be a checking account with interest. So there you go. That would be probably the most beneficial. Also, no fees, because the money is sitting there for long amounts of time. It may be 2 months before you touch it, 3 months, whatever, before you touch it. And you don't want something slowly chipping away $7 at a time, while you're putting money into it. You don't want that. So you want to look for something that is a free checking account. That's the hard part. A free checking account that also is interest bearing. Most of the time there's going to be a minimum balance, so you want to keep that in mind, because then we're back to the whole balance situation. And that's why you need to think about how you're going to use the account before you pick the account, because if it's a set and dump, most likely you have that minimum balance, or you're going to get there and you don't plan on touching it. However, when you do touch it, is it going to be touched all the way to zero? Then you have to think about that minimum balance is going to come back until you get it back. The minimum balance fee is going to come back until you get it back to the threshold that it needs to be at to be free. If it's a place for daily transactions, you'll probably never stay at the minimum balance requirement. So that's also that. But because it's like a save, if you're using it as a savings and you know that you'll always have at least a certain amount of money in there, even if you touch it, a certain amount of money will still be in there, then you can think about most likely have the interest bearing aspect to it. But again, everyone's being very competitive, so just look around. Sometimes there might not be a minimum balance and it still give you interest. So shopping around is important, but these are the things you want to ask yourself before you shop around. Make your little list and then think about those qualifications and then start shopping for your bank account seriously. Thanks for watching. I'll see you guys again. I'm working on a pop culture finance series because I'll explain why in the video, but I just wanted to start breaking down finances in iconic shows and maybe even movies I'm watching, you know. I'm still figuring out the format, but I've worked out basically the information in the video, but I'm trying to figure out the format of the video. So look out for that. More financial videos to come. I know this was a long break, but it was for professional reasons. There are certain things, you know, you can talk about and you can't talk about. So all of that I had to figure that out first before I continued with the videos, you know. Okay, bye. Thanks for watching. See you guys.